Welcome to this Market Intelligence Explainer, right here from the corporate news desk. I'm so thrilled you're joining me today because, wow, we are looking at a truly fascinating, almost totally contradictory moment in the Turkish polymer markets for the second week of August 2026. You know, if you've been watching the charts lately, you already know the numbers are telling a story that completely defies traditional expectations. So my goal today is to break down exactly what's happening, why it's happening, and most importantly, what it means for you and the industry. But before we unpack the week's big paradox, I really want to acknowledge Polymer Bazaar. They're the source of today's critical pricing data, and their insights are giving us the foundational numbers we need to navigate these pretty turbulent market conditions. So with their data in hand, let's get right into the analysis. Okay, let's dive into this. Here's our agenda for today. We'll start with market headlines and drivers, then break down the specific trends across polypropylene, polyethylene, PVC, and polystyrene, touch on the PET market status, and then bring it all together in our weekly wrap-up. Starting with Section 1, Market Headlines and Drivers. We're calling this the supply-demand paradox. The absolutely crucial point here is this specific combination of macro drivers. We have a market that is fundamentally weak on the demand side. Buyers are just stepping back. And a massive reason for that? High interest rates. They're actively crushing purchasing power across the board. But fighting against that weak demand, we have major logistical issues severely hampering our supply chains, coupled with heavily uncertain feedstock prices. We basically have forces pulling the market in completely opposite directions. It's an economic tug-of-war where, strangely, both sides seem to be digging their heels in. It's kind of like trying to sell ice in a blizzard, but all the ice delivery trucks are broken down anyway. Which leads us directly to the central question of this explainer. Why on earth are prices pushing upward when demand is fundamentally so weak? I mean, it goes against Economics 101, right? Usually, when demand drops, prices drop to entice buyers back in. But this week, the supply-side shocks are totally hijacking the steering wheel. Let's look at exactly how this is playing out in specific polymer categories. Section 2. Polypropylene, or PP trends. Logistics overpower demand. In the PP sector, you really see this exact tug-of-war in action. On one side, buyer demand has stayed weak, but on the other side, the supply chain is just being choked by ongoing logistical issues. The big takeaway here is that these logistical bottlenecks are completely forcing the market's hand. Supply constraints are literally winning the battle over weak demand. And this brilliantly illustrates the real-world financial impact of that bottleneck. Looking at cost and freight prices, homopolymer grades have pushed up $40 a metric ton, landing at $1,078. But the copolymer grades, they're experiencing an even sharper spike, climbing higher by $70 to reach $1,210 per metric ton. It's just a remarkable price hike in such a low-demand environment. Moving on to Section 3, Polyethylene or PE updates, feedstock uncertainty. Now, just like we saw with PP, polyethylene is dealing with those exact same logistical constraints. But here, there's a twist. The market is also handling uncertain feedstock prices, acting as this extra catalyst. When your raw materials are unpredictable and the shipping lanes are clogged, well, producers essentially have to bake that risk into their pricing, which pushes the PE markets even higher. Looking at how these increases land across the different PE grades, high-density film took the biggest hit, moving up $20 to $1,090 per metric ton. High-density injection molding and blow molding both crept up $10, landing at $1,085 and $1,090 respectively. And while we don't have an exact hard figure for low density right now, the trend is completely uniform. Prices are definitively higher across the board. Section 4, PVC and polystyrene or PS. The interest rate impact. This is where we really start to see the heavy impact of those interest rates on retailer behavior. For PVC, the situation is super fascinating. Retailers actually have enough stock right now. There's no desperate scramble for material. Yet, despite having adequate inventory on hand, the sheer cost of imports is driving the market. Higher import offer quotes successfully pushed CFR prices up by $30 to a metric ton, bringing PVC to $810. Basically, even when retailers feel comfortable with their inventory, those global import pressures are just way too strong to ignore. The market psychology in polystyrene right now is completely laid bare by this reality. To quote the source directly, high interest rates curbed the buying mentality of converters. They used their stocks at hand rather than fresh purchases. Look, money is just expensive right now. Converters are looking at those high interest rates and actively deciding to burn through their existing inventory rather than taking on the financial burden of fresh purchasing. Now, what's really interesting about this slide is, despite that total lack of fresh purchasing, look at the price action. A massive $60 per metric ton jump. That is a uniform surge hitting multiple polystyrene grades. You would think converters sitting on their hands would cause prices to plummet, right? But the supply-side realities entirely eclipse that stalled demand. So following that sweeping $60 surge, general-purpose polystyrene is sitting at $1,605 per metric ton. High-impact polystyrene soared to $1,675, and expandable polystyrene is now resting at $1,655. Just an incredibly aggressive hike entirely driven by the supply side. Section 5 brings us to our final specific sector analysis. PET market status. Tight supplies. Once again, we see this exact same push and pull dynamic mirroring the rest of the market. We have exceptionally dull demand on one end, going head-to-head with incredibly tight purified terephthalic acid or PTA supplies on the other. It's basically a classic standoff between a sluggish buyer and a deeply constrained seller. And who won the standoff? Well, the constrained seller. The tight PTA supplies narrowly won out, nudging PET prices up by $10, bringing the price to $1,310 per metric ton. It's definitely a smaller bump than we saw in polystyrene or polypropylene, but the underlying mechanics, where supply completely dictates the terms, are exactly the same. Finally, Section 6, our weekly wrap-up. So bringing this all together, what do you really need to take away from this explainer? Across the board, from PP to PE, from PVC to PS and PET, prices rose, period. We are looking at a market where supply-side shocks, namely those awful logistical bottlenecks and feedstock uncertainties, have entirely overpowered weak demand and high interest rates. Supply chain realities are currently dictating the terms of trade in the Turkish market, no question about it. For deeper data and forecasting on these numbers, I highly encourage you to check out Polymer Bazaar or contact them directly at the info on your screen. I want to leave you with a final thought to ponder for your own strategic planning. How long can supply constraints actually sustain these price hikes against the immense weight of high interest rates and stalled converter demand? I mean, eventually converters will run through the stock they have at hand. Will they be forced to buy at these elevated rates, or will demand destruction finally break the fever and halt the upward price momentum? It's a really delicate balancing act, and we will be right here to explain the numbers as soon as they drop. Thanks so much for joining me on this explainer, and keep your eyes on the data.